Today we're going to be reviewing stop hunts at the high and low of the day. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Tuesday, end of the week. We've already had some good movement yesterday on a couple of the pairs and this morning early in Asia. A couple of questions regarding stop hunts and recognizing the high and low of the day, and just going over some of the really basic concepts. We'll hope to cover some of those questions today. We've reviewed structure. We're going to go over the high and the low of the day today. But we talked about this in one of the earlier videos, the different types of M and W formations that occur at stop hunts at highs and lows of the day, the type 1, type 2, type 3. We'll review that again. We'll also look at the extended W, extended M, the shortened M, and the shortened W. The shortened M, extended M. The different variations that will occur at the highs and lows of the day. It will review some of the screenshots from yesterday and go over the pairs and what I do just to continuously review and reinforce the basic concepts. We're always looking to where the money is, and you know, the easiest way that I always reinforce this to myself is understanding that the market will create a high and a low at the beginning of every session, every 12 candle window. If we're already into an extended range from a previous session, whether that's Asia, the US, London, we'll review that as well, understanding that if we're up high and the market gives an engulfment or a sell high signal, and that is the new high of the day or the new low of the day if it was down low, then all that market has done at that point is give us a new high. But it's when it goes back there a second time where we're going to receive the information that we need to either be buying low or selling high, whether it's a trend trade, whether it's a stop hunt for a reversal. And the most critical part in understanding that is the timings. When the market heads into those 12 candle windows, we're either going to be going for a stop hunt or we're going to be going for a breakout pullback continuation. And in most cases, depending on where we're at with the average daily range, if it's heading into the US session like we saw last night on the pound New Zealand, 3 pushes to the high at the equities open, pin hammer engulfment reversal for 50 plus pips down. These are the sort of scenarios that you're going to see play out again and again and again. So we're going to review those and just go over some basic understandings that I look for each day. And even as the day unfolds, if I've missed something or haven't caught a setup that's moved, how I can look to see how it's behaving as we head into the next session. You're not going to get all the trades. That's okay. It's more about the understanding of as to why we would enter a trade, how we would protect our downside, what we would look at as a potential profit target or an area where that trade may finish or fail or exhaust itself, the types of candle formations that will confirm that, and then just managing yourself and the trade and allowing that market to do what it's going to do. We can only control our process and ourselves. The market is going to provide an outcome. We can't control that, but we can only control our process and master the execution part of that. So if we were to look at Asia, you know, every day Asia will give us a low and a high, and it may be inside of that 12 candle window. It may be outside of the 12 candle window where we'll get a high or a low. But at some point as we head into the Europe, London 12 candle window, we will have a high and we will have a low. So when we head into that session, if we might be inside, we might have already come off of a high peak formation. And the market, as we talked about, we have type 1 is where the market is extended outside of the range. So the market may have broken out 25 to 50 pips and given us a low or a high. And we don't know if that market is just in a trend at that point. But the second time that it goes back there, we now have a possibility of a market setting up for a reversal or a continuation. And if we were looking for a trend trade, what I would be looking for is a market that has broken through the low and is working back into the trend for the engulfment or pin hammer back with the trend. I'm not looking to trade with the swing, and if I am, I need to be going to break even when it gets to this low. And the reason why that is because when I break a new low or break a new high, that is the most vulnerable area where the trade can reverse or come back and hit my stop to stop me out. Now we look for engulfments and pin hammers. So one of the easiest ways to recognize a stop hunt is when you're at the high or the low. If you have a low or if you have a high, you'll see a tail go up through with a bar that closes back inside on the second leg. And the same goes for the downside. So we may have a low in place and it may have even had a pin there. That second pin is the stop hunt into the trader who's the first mouse getting back for the reversal. Now again, remember, this is different than a market that's broken out and trending. The difference being is that often a market may give a pin bar or something inside inside of the range of numbers in the middle of a 25 pip box for a measured move down through. So we're talking about a market that has a high and low. It might have even broken out, but it's given us a low. It's got a bar there, and it comes back a second time at the timings in that 12 candle window and does one more reach down inside with a middle structure, whether it's for a down move or an up move. We need that middle structure for that to complete our trap, catching people up high chasing the long move or catching them down low chasing the continuation move. So we'll look at some examples of that, but also understanding that the market can do an extended W formation where that second leg is a little bit lower and we get that last grab and it closes back inside of that first leg, but it's an extended W for the reversal. And again, the same thing can occur on the upside where they go back a second time and then they give us the engulfment with the pin with our middle structure, and they might even come back underneath before they roll it over, which is a 3-push pattern. Now the easiest ones to spot obviously are when they're just type 1, just a regular M or W at the high and low of the day with the middle structure and engulfment. Pardon my artwork. And then there's always an extra little pin into the guy that gets it right, and that's just again going after anybody who's gone to break even or trailing the trade. So the other scenario is that we might see a market extend out and it opens up here and gives us a pin, an engulfment with a pin. Again, pardon my artwork. We might get both. But at this stage, all we have is a high of the day that's been put in place. And the market sometimes will do 3 pushes down and reverse in that W formation and give us a new low of the day, and that's where our existing trend continues through the peak formation. So I've had people ask me, why did that trade fail? Well, it's important to know that if that's a new high and we're in a breakout, all that is a new high. If we're looking to trade with the trend or for a second leg for that reversal, we need a low of the day put in place first before that can be established. And the same thing goes if it was a down leg. So often traders, the market moves down 25 to 50 pips, they get an engulfment and a pin hammer on its own, giving us a new low of the day, and it may be the new low of the day. But at that point, all we have is a new low in a market that's broken out. So it's important not to just get in because it's an engulfment with a pin hammer, when in fact we want to see that second middle structure paint when they go back the second time for our move back with the trend. If it's a trend trade, it will continue through that low for a measured move in most cases. But again, the most critical component of that is the timings, because that usually will only occur at the high or low of the week on an extended 50 pip stop hunt, but it'll coincide with the end of the London opening, equities market opening in that second or third hour. Very rarely will you see that in the gap time. So people have asked, what do you mean by the gap time? The gap time is the 3-hour window that follows after our 12 candle window. So we have our 12 candle window, then we have the gap time that is between the next 12 candle window. So we get a Europe-London 12 candle window that ends at 5 a.m. New York Eastern Standard Time, and then we have a 3-hour session of there's still trading in there, and there are trades there are good trades that occur at the high and the low of the day in that session. But that also sets up for what's going to happen in the next 12 candle window. We might open up inside, and then when New York equity market opens at 9:30, they might go 1, 2, 3 to hit the high and give us an engulfment and a pin hammer reversal like they did last night in the euro. The euro went up 1, 2, trapping traders on the equities open at the very high before they engulfed it and reversed that market back down off of a peak formation. So really critical. Structure. Do we have any sort of geometrical patterns? Are we in a bigger rectangle? Is it a peak formation? Again, Monday, very common to see peak formations. Same with Tuesday. We may have one setting up on a couple of the New Zealand crosses. Are we at the high or the low of the day? So we have our high in place and our low in place from the Asian session. And when we go into New York, we might have a new high and a new low from the London and Europe session. Are they going and hitting the high as we head into that next 12 candle window, whether that's London or New York? Or are they hitting the low? Are they giving us some kind of indication of we've had maybe 3 pushes to the high, and that second and third push is into a peak formation for a reversal? Same thing on the downside. Or is this market trending and they're working 3 pushes down into the trend for the continuation in the next 12 candle window? These pushes will occur at round numbers. So your high and your low might be somewhere around those levels, but usually the fill price for that trend trade or that reversal will come at numbers. And it may be give or take a few pips in either way. Sometimes they move the market and you can still fight for a better fill price, including the spread. Usually there'll be an engulfment of some sort and a pin hammer. And again, that pin hammer is an indication that they've done their work, whether it's down or low or up top. They're locking it in to move the market. Put your stop in place. Again, 1 ATR. If I'm up high, I'm going to use a 1-bar stop to the high. If I'm down low, I'll put a 1-bar stop in down at the low. Set my profit target, and then obviously manage the trade. If it starts to behave differently, you sometimes I'll need to make decisions in live time. Trading is an evolving process. Sometimes you're going to make decisions in live time. I used to beat myself up about maybe holding on too long or getting out too late or not holding on long enough, or taking a stop out when I should have moved it earlier. Just different things. But I resolved myself to accept that when I make a decision in live time, I made it the best decision that I could with the information that I had at that time. When I go back and review it, how can I do it better? And trading is never going to stop teaching you. So don't beat yourself up. Figure out how to get better. The only way to improve is take your lumps, figure out what you can do better. And again, I simplify my process to work from the high and the low of the day. I'm looking for reversals in that 12 candle window or trend trades. Same thing up top. They're going to go after the money. So once they've done a stop hunt, and again, a stop hunt is different than a breakout. A stop hunt typically is going to end up having pins somewhere. A breakout is going to be coming right out and pulling back to continue through. Sometimes they'll break out and they'll work the low for that type 1 W or M. Sometimes they'll be jamming into the low, and again, the timings are what's critical, because as we head into the equities open, that's the most important time. If they're ramming it into the high at the New York equities open and it's not going anywhere, and we've had 3 pushes and we're at numbers and we're at the high of the day, I'm definitely keen on looking for something setting up for a reversal. And one of the easiest ways to try and identify that is how many pips are from the low to the high. So where there's money sitting, am I 50 pips or more to the low or to the high of the day? Because if they come back to even tap out the last low or the last most recent high, and it's at least 50 pips, well, I know there's a high probability that if I get a trade signal up top or down low, that I'm going to have at least that to shoot for. Doesn't mean it's always going to get there, but if it goes there, it'll move pretty quick. So again, structure, high and low of the day. Have we broken out of a previous day's range, or are we jamming into it? Are we in the 12 candle window? Whereabouts are we in that 12 candle window? Remember, each hour has an hourly rotation, and it's usually the end or the beginning of an hour when that move will take place. And especially after they've hit the stops and we've had pins, start paying attention to the type of candle formations that set up at the low or at the high of the day. You'll be at numbers. I try to fight for the best price. Sometimes if I see the candle formation there, I'll look to enter in as best I can near the numbers with the spread. Engulfments, pin hammers, put my stop in, usually going to be 20, 25 pips, sometimes 15. Profit target, let the trade play out. So hopefully you got some value from today's video, traders. Again, just repetition, repetition, repetition. High and low of the day, types 1, 2, 3, W's, extended W's, shortened W's, same thing with the M's. Type 1, 2, and 3, up high at the high of the day, 25 to 50 pips above or below. Type 2 at the high or the low of the day, and type 3 at the low and at the high for M's down low and W's up top. And keeping it simple. Have a great trading session. We'll look at some examples of yesterday's setups. Stay disciplined, stay focused, keep getting better, and may the markets go with you.
Good day, traders. Stacey Burke continuing our discussion on stop hunts at the high and low of the day, just reviewing our simple process and my simple process, marking the high off, marking the low off. We have our high of the Asian session. We have our low of the Asian session as we head into our 12 candle window. So traders, you could mark the lower bear candle, but typically speaking, we have our middle structure. The market breaks out just at the end of the Asian session. We redraw the high of the day. The market comes down, drops 25 more pips, puts a pin reversal in, pulls back up, pins up inside the box. And again, we have our first four candles are from the first hour of our 12 candle window. The first candle pins back up into the box of the London Open, goes sideways, little bear hammer, and then a pin bar through the low of the day, a bull pin off the numbers. Then the market proceeds to pin back up, but then the next candle also pins back up, and we get our little bear candle. So some traders got in on the bull pin yesterday, the break of the bull pin. This is an engulfment, just in a different variation. So we can see that this combination, these four candles are the second hour, the London hour. They're down low. Then the next hour opens with a bull pin reversal. And the next candle, the second candle of the third hour, engulfs above the pin bar. And then the market breaks through into the upper box, through the numbers, stop hunting the high of the day, but it pulls back on top of the previous day's low, where the market previously found some resistance after falling through, layered on top, and then in our gap time went 1, 2, 3, pin hammer to the high of the Asian session, the high of the day, before engulfing back inside, then dropping down back inside of the most recent swing high at the end of Asia, through the double zeros, and then a bear pin hammer as we head into the US session 12 candle window. So I talked about how many pips from the high to low. The bull pin bar, the low of the day was 78.95. Well, 79.45, basically 79.50 then, is 50 pips from our low of the day. But then we've also talked about the high bull candle. I know some traders use this combination of the top two candles. They might use because they don't know. So as soon as they get that second large bull candle that's part of that peak formation candle. They couldn't consider that the high bull engulfment. So again, we talked about closes below or above the low bear and the high bull. This confirms our reversal as we head into the US session 12 candle window for the 50 pip move back down. Now again, not saying that every trade setup is going to be ideal, but you're going to see variations of hitting the low, so we have the extended W formation, or working the high in 3 pushes. 1 push, 2 pushes, 1, 2, 3 pin hammer to the high, and engulfment. And then sideways underneath the previous stays low for the 50 pip move back down through the low. Pound New Zealand, great. I know a couple traders spotted this right out of the gate. We had our low of the day from Asia. We have our redrawn high of the day from Asia. The market in the Europe 12 candle window comes down, pins through the low, pulls back, similar to the Pound Aussie in the London Open, pins back up into traders who are short before pinning down through the low one more time. But the closes are still inside the low of the day. Pinned to the low. Some traders got in at numbers. Other traders waited for the engulfment, and here's an example of where a lot of traders would be scared out of chasing this move, because now you're forced to buy high and follow that move, and the market, again, plays its games where it reverses with a pin hammer off the high into the trade, and traders either decide to get out, they don't get in. Some traders shorted this, and then boom, the next candle at the end of our 12 candle window engulfs the high of the day. So a couple of things to pay attention of. We had the high of the Asian session still above that pin hammer. So although the pin had gone up there, it didn't go through and necessarily clear out the stops. So an example of a reversal trap where traders have an existing long trade off the low of the day on an extended W formation, 1 push, 2 pushes, down into the low of the day. We have structure for a measured move, so the high and the pin hammer low for a full 100% expansion. And again, the question to ask yourself is, were they working the high or working the low? Well, they were clearly working the low. And again, timings. So we have 2 pins down at the low of the day in the London hour. Sideways doji pin inside, and then an engulfment candle. And in the last hour of our 12 candle window, after an existing breakout, they put one more push back into traders who have gone long before reversing the market. But the best setup, we have the high of the day. The market came off the low, 1 push, 2 pushes, 1, 2, 3 stop hunt into the trend in the gap time, and then 1, 2, 3 to the high. We have our high bull. They give us a second high bull inside. We get a pin hammer engulfment at the end of our gap window just prior to the US session 12 candle window. This bear pin on top of the numbers is a trap. Traders will chase the move long, and if you draw your line across the low of that pin bar, that's a flip zone now. Once they break that, we should get a measured move of this candle alone. But we had our engulfment pin hammer under the high bull after a 1, 2, 3 on the third leg to the high. Heading into the US session 12 candle window, that market again came down to the low of the day. Didn't quite get to the low of London until the rollover time, but again it hit the low of the day from Asia, which we only had pins through. So traders, you had 50 pips, 75, whatever traders wanted to take off the table. But we had extended W in the London session for the buy off the low of the day, 3 pushes to the peak formation, a 1, 2, 3 pin hammer engulfment under the high bull. As we headed into the US session 12 candle window, that's a textbook perfect trade setup. We look at the pound Canadian. Again, just running through all the pairs and just marking off our highs and our lows. Are they working the high? Are they working the low? Great example on the pound Canadian where they've given a pin hammer on the second candle of the London hour. Traders have gone long, but that's our new low. We talked about the market gives us a low of the day. They hit the stops. They pull it back. They go lower again. They pull it back. So all that is now is a low of the day. They come down a third time and hit it one more time. In that London hour, we get a little inside bar at the first candle of the third hour. Pin hammer, bull hammer at the low of the day. They engulf back inside. One more push into traders who have got the trade right. So that's where traders get shaken out. They come back, stop hunt into traders who have got the position right with their stop at the low of the day before the engulfment and the shift candle. Back up through the high of the day for the measured move. Another 25 pips on top of the Asian session box. So again, one push, two pushes, and a 1, 2, 3 to the high in our US session 12 candle window. And again, just paying attention to all the pins above. We'll just change the color here. All the pins above the high of the day, above the round numbers. And we follow up our high bull candle. And again, an example of where the market gives a little one last gasp into the traders who are short up top with a little pin hammer before shifting the market. So again, an example of where traders are forced to chase the move, or they recognize what's happening, they position themselves at numbers, and again, that middle structure for the flip zone and the measured move down. Marking our highs and lows and just the process. So again, I'm not saying that any of these are all textbook perfect, but just the process itself. So we head into the end of our Asian 12 candle window. The market is still making new highs on the GU. We get an engulfment in that London Open. That just gives us a high of the day. Some traders have shorted this, but you'll notice the market is now in a breakout, and this is our new high of the day. So we need a couple of things. We need a low of the day, and then we need the market to either continue with the trend or to work one side or the other to give us a reversal setup. The market gives us our low of the day at the end of the 12 candle window, and it comes back again a second time into the low before reversing with an engulfment reversal and working back to the high just as we head into the 12 candle US session window. They hit the high, so we have one push, two pushes, and then three pushes and an engulfment off the high of the day. In our second hour, the market comes back to stop hunt traders who were long off that middle structure in the gap time before pulling back and then going into consolidation. Process: redrawing the highs, redrawing the lows, and then letting the market tell us where it's going to trap people or break out and continue its trend. The pound yen, again, an example of where the market, we have our high bull in the Asian 12 candle window, but you'll notice it did not close below. It continued the move and eventually engulfed the high bull in the London Open, giving us a high of the day. The market proceeded to auction down, second push, and then 1, 2, 3 to the low, stopping out the low of the Asian session, and then pulling back in three pushes into the peak formation where the short trade originated off the high bull candle. So again, just the low of the high bull candle, the high of the bear pin at the high of the day, and you'll notice the market pins up on the three pushes inside of that upper box at the round numbers before reversing on a breakout pullback, continuation engulfment. So we have our type 1 M structure on our second and third push before we get the engulfment and the move back down to the low of the London session, pull back into traders who are short, and resuming the move down. So just reinforcing, working the highs, working the lows. The market gave us a new high up top. Then it gave us a new low before working back into it and continuing back up, jamming traders all in on the inside, hitting stops on traders who were already short, who have gone to break even, hitting them a third time, and then dropping down to stop out traders from the London session. So I just keep sticking to the basics, traders. Look for the best trade setups. I try to, I like this pound New Zealand was textbook perfect. Sometimes you're going to get them, sometimes you're not, but just stick with the process. Keep getting better. Stay disciplined, stay focused, and pay particular attention to the 12-candle window. The market will move when the equity markets open. High and low of the day, engulfments, and pin hammers. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.